Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is entrepreneur, real estate investment expert, and fellow podcaster, Michael Albaum. Now, Michael is a real estate investor and program manager and head coach of Roofstock Academy, which is one of the world's leading real estate investment marketplaces, which has exceeded more than $6 billion in transactions and continues to disrupt the industry with cutting-edge technology and innovations. Now, in the last decade, Michael has done a variety of deals ranging from single-family homes to longer-term triple-net lease properties with national chain tenants. And after years of investing, he found his niche in long-distance value-add multifamily investing. Michael recently left the 9-to-5 world, and prior to the pandemic was traveling around the world with his wife, who was able to work remotely. And so with that, guys, it's my honor to welcome Michael to today's show. Michael, how you doing, my friend?
Hey, great, Kevin. Thanks so much for having me. I appreciate you having me on.
Absolutely, buddy. Excited to have you here and really interested to hear your story. So with that being said, for those that aren't familiar with you, don't know the story, I gave just a brief intro and preview there, but why don't you go ahead and take a few minutes and fill in the gaps a little bit. Tell us about your background and ultimately how you found your way into this real estate space.
Yeah, totally. So it got started very traditionally, like I'm sure most of your listeners did, went to school, got good grades, got a good job, and thought I'd made it. And I was making a strong salary working as a Bay Area fire protection engineer. And I thought, this is it. I did it. I climbed the mountain. I'm here. And pretty quickly realized that wasn't going to get me where I wanted to go fast enough. So I got this book, Rich Dad, Poor Dad, which I'm sure many of your listeners have also read. And it just slapped me upside the head and changed everything I thought I knew about money. And I understood, he talks about a lot of things in the book, but he focuses so much on real estate investing. And that was something I could totally get my head around because I was a numbers guy. I was an engineer guy. So I lived and breathed Excel and equations and math. So I just started doing some self-education. I spent about 2 years getting self-educated. Bigger Pockets really wasn't around. I wasn't too familiar with podcasts. So I was piecing it all together for myself and ended up buying my very first property. And when that first rent check showed up, I'm like, I'm a genius. Like, I'm a freaking genius. Lo and behold, I wasn't the first person to have ever done this. So I said, if I can do this once per year for 10 years, I'll have 10 properties. And that sounded really good. So I just started pecking away at that year after year. I was purchasing one property. And I had definitely a cheat code and a bit of a life hack in that I was working as a professional engineer, traveling around the country. And my territory was the Northwest US. So I was now a real estate investor, a self-proclaimed real estate investor. So anywhere I went for work, I would just look at the rental market and see what the price to rent ratio was. Mm-hmm. And I was too green, too naive to know about any other metrics. So that was all I was basing my decisions off of. How much does it cost? Compared against how much does it rent? Does it make money? Great, I'll buy it. And so I was buying these properties as fast as I could because out of California, it was just so much cheaper. Yet the rents were still really strong. That ratio was just a lot stronger out of California. So I started picking up rental properties outside of California very soon after I started investing in real estate to begin with. And I got to a point where I said, I'm so well diversified. If anything happens in market A, I'm in B through E and vice versa. Again, I had this stroke of genius, right? And I very quickly turned into, oh my gosh, this is super overwhelming. I'm having to chase 6 different property managers to get updates on 6 properties. And this is a real headache. So a buddy of mine gave me some advice, says, look, go pick one market, 1 or 2 markets, get laser focused and go hammer it. Watch what happens. It'll blow your mind. I said, okay, that's kind of counterintuitive. And about that time is actually when I lost my father. And he was pretty instrumental in kind of getting me set up in this business and helping me. We kind of learned it together. And so I said, hey, I got to do this thing big time. I got to really get laser focused. That's what I started doing. And since then, it's been amazing. And that was really when I got involved in commercial multifamily and kind of fell into value add without even meaning to. Again, was too green to know any different, but started kind of learning it from the inside out. And I've just been doing that ever since. And have since played around with some short-term rentals, again, all remote. And that's been going really well too.
Okay, fantastic. I appreciate that. And what were the 2 markets that you ultimately landed on? Or was it one market or once your buddy said, hey, you need to get laser focused, where did you put your time, energy, and resources?
Covington, Kentucky, which is in northern Kentucky, and Cincinnati, Ohio, which is just across the river. So for anyone that's familiar with those markets, they're kind of one and the same in the sense that there's bridges connecting them, but they happen to be in 2 separate states.
Yep. We own property. Actually, we own a mobile home park in just south of Covington, Kentucky, actually right in that immediate vicinity. So
there you go.
Very familiar. Most people probably don't know where the heck that is. They probably know where Cincinnati is, but not, across the river and what that means as far as Covington, Kentucky is concerned. But I do. So
love it.
Yeah. So today, is that are those the markets that you're still focused in, or have you changed your trajectory over time?
I've really focused there for the multifamily piece of the portfolio. I
Okay.
moved over into the Smoky Mountains in Tennessee, which I'm sure everyone is talking about for short-term rental.
Mhm.
So I'm building a small portfolio out there as well.
Okay. So when you made that pivot, did you decide to sell off the assets that were in those other marketplaces? Because you're kind of scattered all amongst, whatever, how many different markets. Did you sell
Yeah.
those and focus all your energy into those two markets that you decided upon?
Yeah. So I sold off in a couple different markets, kept some in the other. Like I sold some stuff in California, most of the California portfolio, and I sold some stuff that was out in the Midwest to get laser focused on these two markets, but have since went invested in Portugal. So I kind of, consolidated in some markets and expanded in some others.
Got it. So your business is remote, and a lot of folks have a really hard time getting over that that mental block of not necessarily investing in their backyard. And it's interesting because we've been not investing in our backyard for more time than we've been in our backyard, and so like it's very comfortable to me. In fact, I think there's actually a lot of different benefits of outside of just that you might be able to find better value in a different market other than where you live. I find that there's a lot of benefits in that if it really forces you to put together the processes necessary to run an efficient business to where you don't feel the need to go visit your properties in person, right? Because
Yes.
there's not much that you can actually do to add value unless you're self-managing it. But if you got a print management company and you've got someone overseeing that asset, it's not going to be beneficial for you to be stopping by there once a week or once a month, or if there's a fire, there's something going on there, you're still not going to be able to do anything that the property manager isn't going to be able to handle, or that isn't being paid to handle. So
Yes.
I don't feel the need to do that because the closest property we have at this point in time is I guess about 7 or 8 hours away. So talk to me about how you were able to overcome that mental block, and then it sounds like you overcame it pretty early. But talk to me about the system, the process that you have in place to ultimately run this business remotely. Because then you don't just spend a lot of time at your home base; you're out on the road a lot of times as well. I mean, like you're truly living remotely.
Yes, yes. So, I mean, to your point exactly, I think that there are so many benefits to doing this remote for all the reasons you just mentioned. And just a quick story, I was at a real estate meetup, and there was a speaker who was talking, and someone asked him this exact same question. He says, how do you go buy remotely across the country? He says, look, when we're driving our car on the highway and it starts smoking, everyone does the same thing. They pull off the highway and they pop the hood and they look at the engine. Well, unless you're a car mechanic, you have no idea what you're looking at. So go take it to a professional and let them do what they do best. So the same thing can be said for real estate. Just like you mentioned, you could walk by the house, you're not going to know if there's a plumbing or electrical issue, or even if you did recognize, you're not going to know how to fix it. So go hire the professionals. And so that just speaks to your point, Kevin, about getting the right members on your team.
Mm-hmm.
And it's all starts, in my opinion, with the property manager. Property manager can make or break the investment. And so I spent a ton of time, and do spend a ton of time, screening, interviewing, and selecting my property manager, because I've done it the opposite way, where I found the asset and then the property manager, and I was kicking myself because I had to rush down that path, because I'm like, crap, I got the deal, I got to go find the property manager, and I put a bad one in place, and I'm like, shouldn't have done that. So I think it really comes down to how well and how effectively you can screen the local personnel that you're going to be utilizing their services for.
Got it. Yeah.
And so, and for me, it was my very first property was about a 3-hour drive south of where I grew up, and I was living another 5 hours north. So kind of like it was 8 hours away. I happened to know the market. I knew some of the players down there. So that's why I chose the market, but I could have just as easily have gone really anywhere remotely, because that's all I knew. I was too naive, too green to know what it was like to invest in my backyard, because that was Bay Area, California. Just I wasn't able to participate.
Sure. So talk to me about your multifamily business today. What does that look like? What size properties are you buying? And then, do you have a team that you work with? Is it just you solo working with a property management company? Just again, give us some of that framework there.
Yeah. So I purchased everything 2017, 18, roughly, for most of my multifamily. Did
Okay.
some purchases in 19, maybe one or two in 20. So it was a vast majority was value add, and pretty heavy value add. And again, like I said, I didn't really know what I was doing. I kind of fell into it and said, I'll figure it out as I go along. And so I was targeting 5 to 10 unit properties. And again, with a heavy value add component, because at the time, no one was really interested in these properties, Kevin.
Mhm.
Like, and my buddy is like, dude, I can't believe what you're doing. This is amazing. It's genius. Like you're playing in a space that's too big for your average mom and pop investor, but too small for your institutional investor. So it's kind of this middle purgatory, if you will, where there just wasn't much competition, to be perfectly honest. People didn't want to do the heavy lifting that I was happy to do. And the bigger players just wanted the A and B class stuff that was ready to go. So I just was playing in this kind of awkward space, and have since done a lot of the value add and have either refinanced or sold a couple of those assets. And now I'm just sitting on the cash flow, which has been really, really awesome, and looking into doing some more cash out refinances, locking in some debt before interest rates kind of go through the roof again.
Yeah, no, that's great. And did you run into any challenges? I know, when it comes to that size of property, you're right. There's kind of a void there of who your competition is. The smaller mom and pops, they're looking for, the single family stuff or maybe some small
Mm-hmm.
multifamily properties. And then the larger investors really, that's not enough scale for them, unless they could buy a package of 10 unit properties, but ultimately that's not enough scale for them to buy a 5 or 10 unit property. And so what I've always found, way back in the day, we owned hundreds of single family properties, and I always had challenges with the property management companies and their available construction resources. And so if we were to go buy 10 single family homes that all need renovation, I very rarely were able to rely on that property management company to help us with that actual part of the process, actually getting those homes, turnkey, getting them ready to, to be moved in. Whereas in the larger multifamily space, it's quite commonplace that the property management company also has those additional resources available. So if I were to go buy a 200 unit apartment complex today, and just whatever, pick any market, pick Cincinnati, more than likely there's going to be 3 to 5 professional property management companies that have experience in that size asset, but also more importantly, they actually have the access to construction resources they've got to go to, and they're more than likely more than happy to participate. In fact, they probably want to participate in the execution of that value add plan, as we look to get rents up and turn units and what have you. And so, did you have a challenge? Circling back around here, did you have any challenges as far as the value add piece, actually executing on the construction plan? Or was that you doing that, or did the property management company help you, or were you outside, basically hiring your own construction teams to do that? So just wanted some more context there of how that actually looked.
Yeah, yes, and yes to your question.
Okay.
So I have on the Kentucky side, I'm doing a major redevelopment project of a mixed use building. It was like 2 residential and 3 commercial spaces. We're converting it into 15 residential and 2
Hmm.
commercial spaces. So I interviewed and went out there and screened a bunch of different contractors. Ultimately went with the one that my property manager recommended, and that's been an ongoing nightmare. I can speak to that a little bit later, but that's been a really heavy lift. But then the agent that I was working with on the Cincinnati side, actually the same guy was on Kentucky and Cincinnati. I was just having trouble finding good property managers. And so he was kind of playing both roles and eventually went into business as a property manager. And I said, I'll be your biggest client. I'll be your number one client. So he's like, awesome. So he ended up wearing that property manager hat, went and found some contractors, ended up not going well. That contractor ended up being like a criminal, essentially stole 6 figures from me. So we had to go hire our own subs, and we were both kind of playing GC project
Mm-hmm.
manager role. It was really, really challenging. Truth be told though, Kevin, I don't know if me physically being there would have solved that problem.
Yeah.
And so I think that's
Probably
people
not.
need.
Yeah.
Yeah, like I'm not a construction expert, so I think people, when they hear that, shouldn't think, oh man, well, Michael screwed up because it was remote. No, Michael screwed up because he didn't know what he was doing. That's a whole nother discussion, a whole nother set of
Yeah.
issues. So I've done it both ways. And then I've also brought in folks that I just know I've met through the years of operating out there. Okay, this is a good painter. This person's a good roofer. So anytime
Mm-hmm.
I have those type of things, I can call them up and say, hey, go talk to this property manager. Y'all play nice together in the sandbox.
Yeah, no, that's good to know. I appreciate you sharing that, and just it shows that there's pros and cons of that, right? Like the cons are is that it's a pain in the ass for you. I mean, like you're playing in a space that has its own unique challenges associated with it. For example, if you were buying 200, 300 unit apartment complexes, again, those property management groups are very different than those that were going to manage a 10 unit property. They also have access to resources, and they've got a little bit of leverage. If they're managing 5, 6, 7,000 units, they can give steady work to large construction teams. And so it's
Yes.
just a very different dynamic that you get with a larger asset than you do with these smaller assets. With these smaller assets, you're kind of piecemealing everything together again, which, creates inefficiencies, but again, might scare a lot of people away, or someone might get into a size property like that and they didn't realize that they weren't just going to be able to like hand off, all the rehab work of those 15 units of the conversion of that project to a GC and expect that it gets done correctly. More than
Right.
likely, it's not going to be done correctly. They're going to be unhappy. They're going to go way over budget. It's just going to be a nightmare. So
You've been there, I can
yeah,
tell.
yeah, absolutely. Absolutely. I mean, we even deal with it now. So in the manufactured housing space, even with larger properties that we buy, we still have the same challenges, unfortunately, and it's more related to the negative stigma of mobile homes. And so you get a lot of contractors that just kind of snub their nose. And in today's world, there's already a labor shortage. And so a lot of good subs get to kind of pick and choose what projects they want to work on. And so if they have
Yeah.
the option of working on a brand new Class A apartment complex, or a 50-year-old, mature, mobile home community, they're still going to pick the A class, right? Like it's just it's a different dynamic. And we got to kind of, we run through a lot before we find a number of good subs in any new marketplace that we go into, and then we work really hard to actually keep those good subs once we find them. And so
Yep.
with all that being said, you said you bought most of these properties, I think up until 20, maybe 20, you bought one or two. What did you purposely slow with the activity due to the pandemic, not knowing, what was going to happen? And then ultimately, why haven't you restarted the buying again? What are your thoughts?
Yeah. So, truth be told, I was just in way over my head from a cost and
Yeah,
resources perspective. So,
got it.
I was channeling all of the money I was making into these rehabs, and it was just like sucking like this quicksand pool. So, I'm like, okay, I got to put out this fire and put out this fire, and had two fires in one of these buildings, by the way. So, that was a whole nother
What
thing
fires?
of legitimate fires, which is like the definition of irony, because I used to work as a fire protection engineer trying to ensure how to not have fires in buildings. So, that was a bit of a slap in the face. So I was just so busy. I had so much going on my plate. And I said, let me pause the buying. Let me focus on getting everything stabilized, corrected where it needs to be, and then ultimately dispositioned on a couple of these properties to figure out what my next move is. And then ended up buying some short-term rentals in 21 and here in 22.
Okay, good deal. I love going through kind of case studies. I know it doesn't sound like you're completely finished with that project yet, but you'd mentioned a property. I think it was 3 commercial units and 2 residential, and you're converting it. And correct me if I'm wrong,
Yes.
you're converting it to mostly residential with a little component of commercial. Maybe give us some details on that. What vision did you have, or what's the opportunity that you saw that others didn't see with this property? And give us kind of the lay of the land of acquisition cost, cost to redevelop it, and then what you're hoping for it to look like on the back end.
Totally. So when I first came upon the opportunity, it was packaged together. This building, it's 20,000 square foot mixed use building with a next door fourplex. Same owner, he wanted to sell it as a package. Both were in rough shape. And this bigger building, they advertise it as qualified for local tax incentives, local city incentives. I said, okay, let's find out what this is. Basically what that was is the local city of Covington was giving $20,000 per unit of rehab cost to developers as long as they maintained some commercial presence on the bottom floor. They call it the upper floor rehab incentive. So I said, great. It already has these 2 commercial units, 2 residential units and 2 commercial units. What I was going to do is split one of the existing residential units. It was a massive loft, cut it in half. So I would have 3 on top, 3 residential, and then I'll leave the 2 commercial down below. And I talked with my property manager as this project was underway, which again, first development project, should have known, was in way over my head, but chatted with my property manager. I said, hey, what's the highest and best use for these other spaces? Big commercial spaces. And he goes, residential. And I was like, all right, well, let me reach out to the city and see if these units will qualify for that same incentive. So I called them up. Sure enough, yes, they do. So I said, great. So I started work on the middle floor. And then they come back and say, oh, well, if you're going to do this, you need to put an elevator in the building. I was like, holy crap, an elevator, that's like $100,000 expense is what it turned out to be. I said, how do I avoid that? And they said, well, you could develop the bottom floor into residential. And I said, well, does it qualify for the incentive? And they said, yes, it does. I said, great, let's do that. So it turned from a very, very minor scope in splitting an existing residential unit into really creating an additional 10 units out of thin air. like I said, I had 2 fires in the building during the course of construction, a week
Wow.
apart. A week apart while I was in Costa Rica. So my property manager calls me on a Saturday. He goes, "You're probably wondering why I call you on a Saturday." I said, "Yes, Josh, I am." He goes, "Well, we just had a fire in the building." So I was in the middle of an insurance battle for about 18 months. And for a large portion of that, the insurance company was telling me, don't touch the damaged area, because that's part of an active claim. And so if you change anything about that, we're not going to be able to assess how much damage was done, because I had to bring in a third party, oh God, what's the term? Not an appraiser, basically a third party advocate for me to go up against my own insurance company. And so
a claims adjuster, the third party.
Yeah, an independent adjuster. Yeah.
Yep.
So, and I come from the insurance world. So like this was a whole nightmare trying to navigate this space. So this has gone so sideways. When it's all said and done, I'm hoping to be grossing 22-ish thousand a month on the units for rent. Hopefully value at 2.5 million, somewhere around there. Acquisition was, I think, 640. All in, I think rehab was probably 1.8 to 2 million. So I'll be underwater in terms of value, but doing really well from a cash flow perspective. And the reason part of that budget went so over is because of the rehab costs from the fire and the insurance proceeds.
That's a big rehab. That's a huge rehab. So let's talk about the funding side of that. How are you funding this project?
Yeah, it's a great question. So went and got commercial loan for the project at its initial phase, and was able to get loan modifications to build it out as we went. And so that was just a traditional commercial construction loan. That was fairly easy to get. When this thing started going totally sideways, was when I got really scared, because I still have loan payments to make. I still have construction costs to maintain, but the schedule has been so delayed because of these fires and the inability to physically do work on the building for fear of not being able to collect insurance proceeds. So it was just a real mess. So I had to refinance a ton of other properties that I had, sold a couple to generate some more cash to put into this, but it's all been self-funded.
Wow, that's crazy. So where are you at as far as getting that project completed? What's the time horizon?
Super close. I've been told we're about 3 to 4 weeks away from getting totally wrapped up and getting final inspections on everything.
Okay, well, fantastic. Well, wishing you the best on that one. That's
I
could see where some additional gray hairs would come.
Yes, yes, they turn gray and fall out immediately.
And so, any concerns? Obviously, when you started that project, and we'll move on from here. But I want to ask one last question, because I think it's very current to the times that we find ourselves in at present. And when you first bought that property, you obviously had a financial model kind of laid out as to how long it was going to take you, how much it was going to cost you to do the entirety of the rehab process, and then what the permanent debt was going to look like when that time came, based on a rate, based on amortization term, what have you. I'm assuming amortization term is probably the same, but we know that the rate is probably much higher than that of what you had originally underwritten. And so any concerns there, or is the bank that you're working with, are they fairly flexible, still willing to give you a pretty competitive rate, or
it's a really good question. Last time I spoke to them, they were still able to be pretty competitive, but that was a couple months ago. So now that you mention it, I need to make a couple phone calls after we get off the
things have changed
here.
quite a bit over the last couple of weeks.
Yeah. So maybe I'll look to beg them to let me keep my construction rate at 4.99, because it might be better than what I'll be getting when I convert it to a fixed term.
And they won't have an issue giving you a cash out refinance, you don't believe?
Well, so that's part of it, is they've been a real pain in the butt to work with. The banker that I started working with at the beginning of this project has since been let go of that bank, if that gives you any indication of how he was as an individual. So they'll likely give me a cash out, but my plan is to go more institutional based on the size of the loan and the debt I'm looking for, and just to get a longer amortization rate. Because I'm at a 520 right now. So I'd like to push that out to a 25-year AM, or maybe even a 30-year AM if I can get something with Fannie or Freddie at that loan size.
Got it. Good deal. And so you've got your finger in a lot of different pots. And so you talk about short-term rentals as well. And so, tell me a little bit about that side of the business. And then more importantly, how have you been able to maintain focus? Again, these all have similarities, right? There's the business side of a short-term rental. I mean, it's real estate. It's operated differently than that of a traditional, longer term lease, 12-month lease. Um, and just give me what your business looks like behind the scenes as far as you managing these short-term rentals. I know you're not managing them, but you still have to asset manage them, right? Like you're still
Right.
involved in the process. Um, Give me a sense of how you keep that all together.
Yeah, so it's a really good question because it is a lot of balls in the air. So my wife has been hugely instrumental in this process, and she has really stepped up and said, "Hey, this is something that I can see you're really struggling with because you
Mhm.
do have so much going on. Let me take on all of this stuff." So we've transitioned a ton of that asset management from me over to her for all of the short-term stuff, even a lot of the long-term stuff. And it's just communications. So it's not a real heavy lift,
Mhm.
which is really nice because she doesn't have to have all of the background knowledge that I've had for years and years and years of doing this. It's just the communications. Hey, this is what's going on here. This is what's going on there. Okay, are we all good at checking in? So that's been super, super nice for me just to be able to totally unload that mentally onto someone else. Because for the
Yeah.
longest time, I've been doing this all myself. I didn't really have
Yeah.
too many partners, so it's been really nice.
Well, good deal. Good deal. And so the short-term rental business, that's an interesting one. And, time will tell, and every market's going to be different than the next. And, Pigeon Forge area, Gatlinburg, all that, that was a booming area before COVID. I mean, it's been a booming area for decades now. Still lots of development happening. And, the interesting dynamic that seemed to occur during the pandemic was not only were people going stir crazy and, they couldn't fly. Well, they could fly, but they couldn't go internationally. And a lot of people were staying off planes anyway. And so they were looking for drivable vacations. So I'm sure there's a large contingent of the population that had heard of Gatlinburg, but just had never vacationed there, that ultimately probably vacationed there in, the years between 2021 and the end of the pandemic. And it seemed also that a lot of folks that had never even considered investing in short-term rentals, um, you know, bought an investment property, and it was a short-term rental sometime during the pandemic as well. And I'm wondering if you've noticed, and I haven't followed any trends, and I have no data at all supporting this. I'm just kind of thinking through how this all plays out. Now, international flights are open back up. People can travel more freely. They don't necessarily have to just, look at vacations within an 8 or 10 hour drive of their home base. And so I'm wondering if there's a risk, and not necessarily Gatlinburg in general. I'm just speaking generalities. If you foresee any type of risk to where there's going to be an excess supply of available short-term rental units, to where it's going to have an impact on maybe what your historical pricing would have been over the last 2 years. I mean, have you seen any kind of adjustment either in pricing or even total number of days or weeks booked?
Yeah, I haven't personally in the
Yeah.
Smokies, but I think I'm still too fresh in that market to really give you a clear understanding or clear insight into that.
Do you follow any other short-term rental like forums or blogs or anything like that to see if that's happening at all across the country?
I don't, but I posted about it. It's funny, guys. I posted about it on Twitter the other day to see, just kind of gauge people's reactions, feedback, insights. Some people said yes, some people say no. I've heard in some of these vacation markets that the cleaners are seeing less cleaning jobs, which is a kind of leading indicator that, hey, maybe
Yeah.
the short-term
Hmm.
rental demand is decreasing. But my personal thoughts and what I'm personally thinking is that there's so much pent up demand from the last couple of years. People want to travel, and I think that with the cost of a lot of international travel, with inflation, with gas prices being so high, plane tickets being expensive, that might
Mhm.
drive people to continue to travel, but do it more locally.
Yeah.
And so I think, to your point, like, it was a booming market prior to COVID. I have full faith that it will continue to be a booming market in the post-COVID era. Um, Other vacation markets may be more questionable, but I said, you know what? I'm new at this. I'm going to start with kind of the tried and true method of what other people have done for a long time. I don't want to be the first pioneer out there trying to figure this
Yeah.
out.
Have you been able to find, so it sounds like you've bought these properties fairly recently. It's been in the last couple of years or?
Yeah. So my first one was September of last year, and then I
Okay.
purchased one May and then June of this year. So yeah.
How does one underwrite one of those investments? Maybe kind of roll through a case study of, kind of what you paid for it, what your expected ROI is on that property, and then how is it performing? Has it met expectations, exceeded expectations, what have you?
Yeah. So the first one I bought was 500,000. and it's projected to do 75, 80 in gross revenue for the year, for 12-month calendar year. And the way that I underwrote it and projected it was working very closely with the property manager. They said, hey, this is what we projected. We have other properties in the area that have similar size and finish. This is what we expect it to do. Here's what your expected costs are going to be from a taxes, insurance, maintenance, utility perspective. And then you just run the numbers very similar to as you're doing a long-term traditional rental. And so it either makes money or it doesn't. So it was fairly easy to wrap my head around. That one has been a little bit light in terms of its actual performance. It's starting to ramp up quite nicely now into the busy seasons.
Yeah.
And so I think part of that was I had just gotten it ramped up, and it also wasn't a very traditional cabin per se. It was a single family rental. Excuse me, it was a single family home. And the prior owner was actually the head ranger for the Great Smoky Mountain National Park.
Oh, wow.
So it was really just a beautiful, well-maintained home, and we converted it to a short-term rental. So it wasn't that traditional cabin look, which I think a lot of people are looking for. Now that we've gotten several reviews under our belt, we've updated the decor and the furniture and actually built out the garage, converted it. So now we've got a game room and a place for kids. It's doing very, very well. So it wasn't day one blew my expectations out of the water in terms of what it was supposed to be doing. There was definitely a ramp up process, and now I'm quite happy with it.
And what type of financing is available for that business model?
So there's a number of different types. So I've used traditional financing for just a traditional loan, 30-year fixed. I've used cash partners on that particular deal. And then there's DSCR loans as well that are out there, which will look at, a lot of lenders will look at the underwriting for the projected income based off AirDNA or some other reasonable form, and give you financing based on that.
Have you found that I'm familiar with AirDNA? I've never used it, but I know what it's used for. Is that fairly accurate data? I mean, is that something that one can use to justify either going into a market or staying away from a market?
I don't think so. I think it gives you a really good general swath that, hey, this is what, the averages are. And I think it's so nuanced and every market is different, right? As you know quite well, you could have massive differences block by block. And AirDNA isn't that nuanced. It doesn't pick that up. And so it gives us an idea, okay, here's what other people are doing. Here's what average listings are going for. Now let's dive deeper and find out, okay, what is this particular property in this particular neighborhood projected to do based on its particular characteristics?
Got it. So you've been at this 10 years now, a little over 10 years. Looking back, what advice would you give Michael now 10 years ago, right? Knowing what you know.
Yeah, it's a great question. I think I would say take on way less in terms of multifamily value add rehabs, that one at a time, not 4 or 5, not from another country, and definitely explore short-term rentals sooner rather than later. I think it was just something I wasn't familiar with. It wasn't, as I grew organically in the space, in the real estate space, my purview kind of grew as well. And I said, oh, that looks kind of cool. That looks kind of cool. That looks kind of cool. And so without trying to get shiny object syndrome, trying to rein in, but I think that that's totally an asset class that can make a lot of sense for a lot of people. And it's also one that can have a lot of different uses. And I think people think of short-term rentals, they think Airbnb, VRBO, or Verbo, however you pronounce it. And it can be you can introduce midterm rentals as well. And that's something that I do.
What's that? I'm not familiar with that.
30-day plus.
Oh, okay. Yeah.
30-day plus. So that's kind of how I got introduced to it. Is my old primary down on the Central Coast of California. My wife and I converted a van. We were doing van life for a long time, full time. So we rented that out because it's a condo and HOA. We couldn't do overnights. So we said, okay, 30-day minimum, put it on Airbnb, and we got booked up like immediately. And so we've leased to traveling nurses. We've leased to people that are just wanting to do remote work in different parts of the state, different parts of the country. So there's a total, again, kind of middle market, if you will, that's not the extreme. It's not the total short term and it's not the total long term, that there's not a ton of people playing in. So I kind of find myself again in this unique spot. So I think that there's a lot of different ways to play that or to spin that other than the traditional long-term rental. So
what does the future hold then? I mean, do you foresee yourself as kind of going all in on this short-term rental or mid-term rental space?
Yeah, I think so. We're house hacking right now. And so we bought this duplex that we currently live in half and rent out the other half. We'll be eventually moving out of our unit and renting out our unit full time, and probably looking to just manage that. And between that and the other short-term rentals we've got going on, that'll probably be the main focus.
Okay, fantastic. Well, for those that want to learn more about you, Michael, and what you got going on, where's the best place to track you down?
Yeah, you can find me at Roofstock Academy, so roofstockacademy.com. I'm pretty active on Twitter at Michael Albaum, and then also on LinkedIn as well. You can feel free to message me there.
All righty. Fantastic. Well, Michael, it's been a pleasure having you, man. Thanks for coming on. Thanks for sharing your story and all the good, the bad, the ugly that goes along with being a, real estate investor and being a landlord. It's definitely, it's not all roses every day at all. There's definitely lots of challenges,
No.
lots of headaches, lots of hiccups along the way, but ultimately it's what gives us character, right?
Yes, absolutely. Got some good war stories.
Yeah. Fantastic. Well, Michael, it's been a pleasure having you, my friend. Thank you.
Thank you, Kevin. Appreciate you taking the time.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bubb, wishing you huge success. Take care.